of a rally in trade. In fact, to close the month of July, we did see the Dow go up by almost 1% in trade. Now for the month of July itself, the Dow is up nearly 7% of course at close. Now we are into August, so almost a 7% rally in the Dow. The S&P 500 also rose around 1.4% with the S&P 500 for the month of July rising 9+% in a single month. So clearly positive cues coming all across from as we carry into August. We did see a good rally through July. The Nasdaq too rose nearly 1.9% on Friday at close, and it's closed almost 12.5% higher for the month of July. So definitely lots of positives coming through. We have seen over 50% of S&P 500 companies now declare their results. So 56% is where that number stands, with earnings really of almost 75% of those companies, which is 3/4 of those companies declaring a better than estimated set of numbers for the quarter ended 30th June. US futures though, talking of August, we're already into it. US futures are looking slightly or marginally lower in trade as we speak in early trade today. Down around 1/3% is where that Dow futures number is. Moving quickly on to Europe. Europe too was positive. I did mention that the positivity was secular on Friday. So European stocks largely in the green. In fact, for the month of July was the best month for European stocks since November of 2020. So lots of positives across the board. Even in Europe, we saw 1+% gains across the DAX, the FTSE, as well as the Stock 600. So clearly a few positives there as well. Moving to the Asia screen, right? Asia is largely looking in the green outside of China. So we are seeing the Nikkei up around 1/3%. The ASX 200 too up around 1/3%, and the Kospi too up around 1/3%. So all three of those are up. And when we're looking at the Shanghai as well as the Hang Seng, the Shanghai is down around 1/3%, and the Hang Seng is down around 1% in early trade today. So that's how Asia is currently looking. The SGX Nifty in itself is up around 1/10% in trade. So mild gains as we see it at the moment for the SGX Nifty. And I'll move to commodities now. Of course, oil has been in focus, remains in focus. OPEC Plus refuses to increase supply. That's largely the consensus view, and that's why oil prices continue on the upward trajectory, but not no meaningful gains for oil either. It's around the $98 a barrel mark as we speak. So that's where oil is at. But gold has been a focus point largely on the back of the dollar index coming off. So dollar index has come off to around 105.5 in early trade today. Mind you, it was almost at the 108 levels a month or so ago. So it's come off quite substantially and meaningfully. And gold on the back of that has rallied. It's gone up to around $1,765 an ounce, especially when just last week it had fallen below that $1,700 an ounce. So clearly a good rally being seen on gold prices. Moving quickly on, we did speak about currency, which is the dollar index, but we'll speak about bonds. Well, bond yields have also come off largely on the back of the slowing US economy. Obviously fears creeping up that maybe the rise in interest rates may be stemmed by the Federal Reserve. They may not want to continue raising rates, and that's probably the fear that's pulled off bond yields from almost that 3.2% mark where the 10-year bond yield was to around now the 2.6% mark. That's where the current 10-year bond yield is. And lastly, moving to the last asset, of course, cryptos that we speak of. Crypto, in fact, Bitcoin breached that $24,000 mark. So there was a bit of a rally on the cryptos side, but it's come off now. It's down around 3.25% as we speak. It's down to around that $23,500 mark is where Bitcoin is at. But when I'm looking at all the other altcoins as well, largely they've seen that bit of a rally, and now they are cooling off as we speak. Where India is concerned, we are expecting a mild start. Of course, global cues largely positive. But India, we're expecting a mild start with the SGX Nifty reflecting around a tenth of a percent in gains in early trade today.